How much do you have to invest in commercial real estate to live off the cash flow without being a landlord? I wanted to emphasize that because what I'm about to talk about here is investing as a limited partner. Don't worry if you're not familiar with what that is, because I'm going to cover that later in this video, as well as a year-by-year breakdown if you want to live off $5,000 a month in passive income.
That sounds good, right?
Hello investors, welcome back to the channel. I'm Adrian. Okay, let's get the math out of the way. To find out how much you need to invest to get $5,000 per month or $60,000 a year, the formula is simple. It is the desired annual income divided by the preferred return. For example, this deal provides a 10% preferred return. So using our formula, the amount to invest is $60,000 divided by 0.1, which is $600,000. Now, I know what you're thinking.
How in the world can I make that kind of money?
Well, it's easier than you think as a limited partner. I'll go over the strategy later in this video. But first, what is a limited partner or LP? There are several videos on our channel going in depth on what is an LP. But to briefly explain it, it is like an investor buying a stock of McDonald's. As a shareholder of McDonald's, that investor doesn't get a say on operations or product development, but only a share of the profits. That is the same as an LP. An LP doesn't have a say in the operations, but they get a piece of the profits. Another similarity is shareholders of McDonald's do not take care of the customers or flip burgers. So LPs are also not responsible for taking care of the tenants. This is what I meant about not being a landlord. Yeah, LPs don't solve toilet problems. It is completely passive. Now for the fun part, the strategy. The strategy only has two steps. Step 1, you need to invest in deals with a 2x equity multiple. And step 2, invest in deals with a high preferred return. Now let's break down step 1. Remember, we need to get to $600,000 as quickly as possible. In order to do that, you have to focus on equity multiple. So look for deals like this or like this. Here's a timeline of what that looks like. If we invested $50,000 in year 1, and let's say it doubles every 5 years, by year 20, we exceeded our desired amount of $600,000.
Adrian, 20 years is way too long.
Okay, there are a couple of ways this can happen a lot faster. By watching a video like this, you're probably taking the steps already to better yourself financially. So between years 1 and 20, you probably are working and living within your means. That means you could probably save up another $50,000 or even $100,000 and invest that in more deals.
Oh, what a nice idea.
Another way of that goal happening faster is if deals exit earlier than 5 years, like these ones. Alright, step 2 of the strategy is how to invest that $600,000 to live off of cash flow. That's where you have to shift your focus from equity multiple to preferred returns. You're not looking for growth anymore, but a steady monthly or quarterly return. So look for deals like this. Now remember, preferred returns are not a guarantee. So I mentioned earlier in the video that investing as a limited partner is as passive as it gets. But that is when you are already invested in the deal. There is still some work that needs to be done before getting into the deal. It's actually only 3 tasks. 1, do your due diligence on the general partnership team and the deal. 2, sign a couple of documents. And 3, transfer the money. It's as easy as that. Steps 2 and 3 are easy thanks to our investor portal. But step 1 is the most important task for a limited partner. It's optional, but if you don't want to lose all your money, I recommend you don't skip this step. And since you're not skipping this step, click or tap the screen now. In this video, I share 3 steps you need to take before investing in commercial real estate.